Hello everyone, what is going on? I hope everything's okay. Today I'm gonna have my last backtesting stream. In this stream, I'm gonna backtest a couple of trading strategies, and then, first of all, I'm gonna wrap up the concepts of the RBI system, and I am gonna backtest a couple of trading strategies, and then I'm gonna compare some backtesting to each other to find out a good trading strategy after backtesting all of this. Um, so, so in the previous streams, I have backtested like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. I have backtested 14 trading strategies, which is not bad in probably 4 days or something like this. So I'm gonna backtest a little bit more today. I'm not gonna backtest like a lot of trading strategies so that we have time to compare the backtesting to each other and to try to find a good trading strategy for this series of backtesting. So let me wrap up the RBI system. Let me wrap up what am I doing and what is backtesting, what is researching, and what is implementing. So in the previous streams, I have talked about the RBI system. The RBI system is basically researching about a trading strategy, researching about it, getting to know what is this trading strategy, how does it work, what is the methodology of it, how did people use it in the past, how does it work, reading about it, and you do this reading part usually by searching on the internet, maybe Google Scholar, anything like this, maybe Reddit, maybe Facebook, TikTok, like just search about the trading strategy, listen to people talking about it, read PDFs about that trading strategy, get to understand it, right? I didn't do this step in my streams because this is just I'm teaching you how you can backtest. I have backtested a lot of trading strategies before. I have done my backtesting on too many trading strategies. I already have my chosen trading strategy that I use for trading crypto. So I don't need to backtest to backtest and read the trading strategies out loud and understand how do they go. My intention here is to teach you how you can backtest as well. So I'm telling you, you research about a trading strategy, understand what is it about, getting to know that trading strategy, hearing people talking about it on Reddit, on Google Scholar, on whatever you get on Google Scholar, you would get PDFs, PDFs for this trading strategy. Read it out loud, just study it, ask ChatGPT about things that you wouldn't understand in reading it, understanding it, and after you research, after you get to know what a trading strategy, what is this trading strategy doing, and how does it work. After you do this, uh, after you research and after you collect all your information about this trading strategy, after understanding how does it go, the next step is you want to know what does this trading strategy do in the past. You want to know this trading strategy win in the past. Did it lose? What happened? You use a data, you use a cryptocurrency data, and you pretend that you are using this trading strategy. You pretend you're using it, but you are not really doing it. You're just pretending that you went to the past and you traded cryptocurrencies. You did it. You traded a lot of much of this this cryptocurrency. You did your trading with this trading strategy in the past. You sold according to the rules of the trading strategy, and you bought according to the rules, according to the indicator that this trading strategy uses. You pretend that you used it, you did it, you sold, you bought, and after, for example, after one day you bought, and after 2 days you sold the according to the price of the cryptocurrency, according to the indicator of the trading strategy. You pretend you have done all of this, and it tells you, if you had done all of this, what would the result be? If you were in the past, if you used that trading strategy to buy, if you used it to sell, if you used it to for a long time, if you used it for 6 months, just running it every day, selling and buying, what would have happened? Would you have won? Would you have lost? What literally have happened? So this is backtesting. This is the power of backtesting. You literally write lines of code, and that lines of code just work and tells you this is the result. If you would have ran this strategy over the past 6 months, for example, over the past 6 months, it would have won this, it would have done this, it would have had a win rate of this, it would have had a certain ratio of this, it would have buy and hold return of this. It tells you everything. You just went through the past and saw what did this trading strategy do? How did it do in the past? This is so interesting. So after you keep backtesting a lot of trading strategies, after you search more, get to know more of trading strategies, after you read about more trading strategies, after you backtest every day, spend a lot of effort and a lot of time backtesting, maybe 1 week, maybe 1 month, just as much as you want to backtest. So after you finish all of this, you choose one. You choose one of these trading strategies that you have backtested. You pick one of them, and then after you pick that one, it's time to create your own trading bot for yourself. It's time to create yourself a trading bot that trades for you according to that trading strategy you have backtested. According to that trading strategy, you have compared it to another trading strategies and got all the information and all the result. If it was going in the past with these data, what would it have done? You compared it to bunch of trading strategies, and you are sure that this trading strategy has done very well in the past. You're sure of it because you have backtested it, you have compared it to a lot of other trading strategies. You create your own bot that buys for you and sells for you that cryptocurrencies every day, every night, and you're not doing anything, you're just running your bot. You just have your bot running and you're spending your life, and your bot is selling and buying according to the trading strategy that you have chosen, and you're winning, and that's it. So what I'm talking about is, it's too hard for you to keep looking at the graphs every day and every 1 hour. It's too hard to keep carrying that hard because it's too hard to do. It's just too hard to keep monitoring the price according to some indicator. It's too hard to keep looking at this at the screen all the time like this and just trying to just check when some price goes down, some price goes high, when some event happens. You buy yourself manually. It's too hard. Maybe you can do this for 1 or 2 days, but you cannot do it every day for a lot of months straight. You cannot do it. So this is how, or this is why creating a bot to trade for you automatically when you're doing nothing. You just spent some effort at the beginning creating the bot, but then you're just sitting here enjoying what you're doing whatever you do, going out, spending time, just enjoying your life, and you have a bot running for you, buying and selling whenever an event or whenever something happens. So to learn how to do this, to learn how to create your own trading bot, for your own trading bot, using your own strategy, your own risk, your own profile. To learn how to do this, you need to check the algo trade camp that is provided by Moondev. Let me show you the link. I'm gonna say algo trade camp. Alright, this bootcamp is provided by Moondev. Moondev is a YouTuber. He has his content is about the trading bots. He has a course or a bootcamp that he gives. You need to check that link below. I have it in my description. I'm gonna put it in the comment and pin the comment. You need to check his uh, his website that talks about the automating or the bot creation and telling you what are you gonna learn, and there is 100% guaranteed money back. You're not gonna lose anything, right? So, and you can check out the people comments, what do people think, people who took that course, and when you get access to the bootcamp, you're gonna have access to our Discord, which will have a lot of trading strategy codes, a lot of backtesting trading strategies, a lot of people helping you. If you don't understand any code, if you don't understand anything, you just chat with too many people that are interested at the same thing, doing the same thing as you, and you just have your community that is interested about creating their own bots. So make sure to check that link, make sure to check the bootcamp, make sure to check Moondev YouTube channel to uh, to know further about creating the bots, because in my streams I am only backtesting, right? So make sure to check that link and remember that there is 100% guaranteed money back, right? So you check everything and you take the decision, and that's it. So let's go back to backtesting. Let's go back to our topic. So as I told you, you research about a trading strategy, you get to know it, you understand it, you read about it, you listen about it, you watch people talking about it, maybe on YouTube, on Reddit, on TikTok, on whatever, just the internet. I'm sure you know how to use the internet, right? So uh, after you get a trading strategy, after understanding it, you start backtesting that trading strategy using backtest.py. Backtest.py is a library provided by uh, it's a Python library that you can use to backtest that trading strategy. It's pretty simple. You just install the library and you just write the code of the trading strategy itself, which you can write yourself. If you really understand the trading strategy logic, you can code it. It's pretty simple. And if you have programming knowledge, of course, you can code it yourself. But if not, you can ask ChatGPT to write a trading strategy code for you, the trading strategy that you have chosen. After you write the code for that trading strategy, after writing the content of it, the logic of it, after doing this, you backtest it using backtesting.py, right? So I'm gonna teach you step by step how you can backtest. I have also backtested a bunch of trading strategies in the previous streams actually. I have backtested a lot of trading strategies, and I have explained this before. So today I'm gonna backtest more. I'm gonna backtest like 3 or 2 trading strategies, and then I have a bunch of backtested trading strategies that I did during the previous streams. So I am gonna compare the results of backtesting of these trading strategies to each other. Maybe I will compare 2 or 3. I will compare some trading strategies to each other, and I will choose one of these trading strategies to implement my automation bot for myself using that trading strategy that I have chosen, right? So let me look at the livestock. All right. So let me give you step by step for the RBI system again. So what you do is, maybe you don't know what are the trading strategies out there. You don't know, you don't have knowledge about trading strategies. You don't know the bunch of trading strategies. You only know 1 or 2. So you really want to get a lot of trading strategies to list them out and start backtesting them one by one. So this could easily be done. You could be searching the internet. You could ask ChatGPT to provide you with maybe 30 trading strategies. So, for example, I'm gonna ask ChatGPT. We're gonna use ChatGPT a lot because this stream is supposed to be non-programmers friendly. You just want to backtest. You want to create your own bot, but you don't have much of experience in programming, so I'm teaching you how to use ChatGPT for this as well. But make sure that if you are interested in programming itself, make sure not to keep copy paste from ChatGPT without understanding how did it solve that issue. For example, if you have asked ChatGPT about a problem and ChatGPT fixed it for you, and you tried it out and it's working, and that's it. This is bad. You should try to read the code line by line and make sure that you understand how did ChatGPT fix that problem. What is the steps? How did implement these steps? If you don't understand any of this, make sure to ask ChatGPT for more information about the code it has written. Ask it, how did he do this? Why did he do this? Teach me about this. Just a lot of things you could do to just help yourself for not copying and pasting a code from ChatGPT without understanding, because this will harm your future. So I mean, that's if you're interested in programming and if this is your career. But of course, if your intention is just backtest, you wanna code trading strategies, you want to just write code for trading strategy, you wanna backtest a trading strategy, you just wanna get the results output, you wanna know the results of these trading strategies, then it would be fine to just take code from ChatGPT and just trying it out and seeing if it would work. But of course, you need to also understand the trading strategy itself to be able to monitor or debug or change the logic of the trading strategy code, because if there is anything wrong in the logic, then it's pretty much not going to work properly, right? So make sure you understand all of these points while using ChatGPT. And this is my opinion. Maybe you agree, maybe you disagree. So I'm gonna ask ChatGPT to give me 25. Like first of all, I'm gonna ask ChatGPT to explain to me what is backtesting. So maybe you still didn't get it that much. Maybe you don't get it from me. That would be okay. I'll teach you how to understand everything yourself. If there's anything that you don't understand, I'm gonna teach you how to use ChatGPT to explain it to you, and in order to have the ability to understand things yourself without anyone having to explain them for you, because ChatGPT is so powerful at this. So, for example, I am gonna ask ChatGPT about backtesting. So, uh, uh, I hear about backtesting, backtesting a trading strategy, but I really do not get it. Please explain to me what is backtesting a trading strategy and why is it and how useful is it? Let's see. Backtesting a trading strategy is a method used by traders and investors to evaluate the effectiveness of a trading strategy by applying it to historical data. This process involves simulating the application of a strategy over a specific period in the past to see how it would have performed. Here's a breakdown of what is backtesting. So it's basically telling you that we apply backtesting on a trading strategy and on a historical data to see what would it have performed or how it would have performed, right? So what is backtesting definition? Backtesting involves using historical market data to assess how well a trading strategy would have worked in the past. By applying the rules of that strategy to historical prices of stocks, currencies, or other financial instruments, traders can evaluate the potential profitability and risk of their strategy. So you can evaluate the potential profitability and risk of their strategy. So it's dependent on you to choose that trading strategy or not. You backtest it and see what it will have done in the past, and it's your choice to choose it or not. Maybe if someone else, if it was someone else, they would have chosen it, but maybe you wouldn't because it's dependent on your risk. So in the process typically involves the following steps: selection of historical data, choosing relevant historical data over which to test the strategy, and I have showed you before how you can get data using log CAI, and I told you how you need to be constant. You need the data to be constant, so to use them in all the trading strategies, right? To use them in all the trading strategies, so so that it can give you the same output always, right? Because your output is going to be according to a trading according to one data that is constant on all trading strategies, because you are gonna pick one, right? So and also backtesting, you need to make it on one like only like constant data. I mean, if you know what I mean, like don't change your data for every trading strategy you backtest. Because if you change the data, then the results of the trading strategy are going to be irrelevant to the results of another trading strategy, right? So this is the first step. You choose relevant historical data over which to test the strategy. This data should be comprehensive enough to include various market conditions. And then you define the strategy rules. This is the strategy logic I have been talking about. You define the strategy rules. I mean, reading about it, uh, reading about the strategy rules, reading about how the strategy works. So it's clearly defining the entry and exit rules for the trades based on the strategy. This may involve technical indicators, price patterns, or other scenarios. So basically, uh, backtesting will work according to the logic of that trading strategy or backtesting, and this is logical. So applying the strategy rules to the historical data to simulate trading decisions that would have been made during that period. And I think it's pretty obvious now what is backtesting. Okay, hold up. Okay, I'm back. I'm sorry. What I was saying is I have covered backtesting now, I think. So now let me backtest one more strategy or two, and then I'm gonna compare the trading strategies to each other. Right. The backtest result, I mean. So let me look for a good trading strategy that I can backtest. Let me get one. Mm, which one do I test? Alright, so I'm gonna backtest a trading strategy called BBMA trading strategy. And this uses two indicators, the moving averages indicator and the Bollinger Bands indicator. So this is why it's called BBMA, because it combines the moving averages indicator and the Bollinger Bands indicator. So and it uses these two indicators to identify the trading opportunities, right? So it has a long entry and it has a short entry, and it buys according to that signal, right? So uh, let me call it BBMA PY, and I'm gonna say I'm gonna import backtesting. First of all, let me just get the let me get let me get into the folder so that I can let me copy the path. 1 second. I need to activate uh, the virtual environment. think it's somewhere here, so I'm gonna say td Python script. Alright, I have my virtual environment here. Remember, virtual environment is basically a place where you install all the dependencies or the modules or the libraries that you are gonna use in your application, right? You can install them without a virtual environment just on your machine, but this is not professional. You need to have separated a virtual environment for each application. So I have the virtual environment for backtesting. I'm gonna activate it. Alright, I have activated it. I'm gonna make sure that I have backtesting.py installed. I have anything that I would need. Alright, I have anything that I would need. So I do have backtesting, I do have NumPy, I do have pandas. Alright, so let me import the backtest and the strategy. So I'm gonna say from backtesting, import strategy and import backtest. Alright, so and I am gonna import pandas as PD and import NumPy as NP. Alright, so I am gonna put the trading strategy itself. I'm gonna call it PP BBMMA, and it's gonna inherit from strategy. Alright, so I will need to write the net function, and I will need to write the next function. Alright, the init function is the initialization method or the init method. So this method basically it initializes the variables or the attributes that are related to the trading strategy that I am gonna use, right? And the next function gets executed. It gets executed every time frame of your data. You get the data from Loxy. Let me show you how you would get the data from Loxy real quick. Alright, so to get the data from Loxy, you have a prompt that you use. Let me show you that prompt. Well, the prompt is, you say, send me symbol data since year in time frame, right? So for example, if you want to get data for Ethereum, Bitcoin, whatever, you say send me Bitcoin data since 2020 and 1 hour time frame. So it will give you data for this currency that you can use for backtesting. And remember, you use the same data for all the trading strategy you are going to compare to each other. Okay, don't forget about this, because you want to get parallel outputs, or what I mean is you want to check the results of these trading strategies. You want to know what would they have done on the same data, so that you can choose the best one or you can choose a better one, right? So you say send me Bitcoin data since 2020 in 1 hour time frame, and it will load the data. It's gonna take some time. It's saying retrieving data. I forgot to delete the prompt. I have sent it like it's a very bad way, so let me delete it. I'm even gonna say send me Bitcoin data since 2020 in 1 hour time frame. So it's retrieving the data. This may take some time depending on how much data you requested. So it's gonna take its time and it's gonna give you the data, right? So, but I have my own data, so I am gonna use it instead of waiting for the data, right? So let me code a trading strategy itself. Yup, the BBMA. 1 second. Alright. So I'm gonna code the logic of the trading strategy. I'm gonna initialize the EMA period with 20 and the BB period 20 and the BB standard deviation. I'm gonna call it std of 2. This is my initialization. This is the attributes I'm gonna need. So I want to check if there is enough data. So I'm gonna say if length of self data smaller than the period plus 1. If there isn't enough data, what am I gonna do is return it. I will basically do nothing. Right, so if there is enough data, then I am gonna initialize the EMA indicator. So I'm gonna say EMA equal to pd.series self data.close dot EWM. I'm gonna set the span of self.EMA period and a main periods of self.EMA period, and of course getting the mean value of the series. Alright, the mean value of the series. And I'm getting the rolling standard equal keyBanders.series self data dot close rolling that, giving window of self.bb period and getting the standard deviation of it. So, alright, and I need to set a lower band and upper band because this is what is gonna decide if I will buy or sell. So I'm gonna say upper band equal to EMA plus self dot standard deviation. This should be plus self the standard deviation multiplied by the rolling STD. Alright, and lower band equals to EMA minus self dot BB standard deviation multiplied by the rolling STD. Alright, so I am gonna say if the self.data.close, the most recent one is greater than the upper band which is the last upper band, I am gonna say this is when you're going to buy. Alright. Else if instead of the data that close most recent one and it's shorter than or smaller than the lower band, then this is when you are going to sell. Alright, sell, that's all. That's perfect. Cool. Now, I have coded the logic of the trading strategy itself that I have read before, I have understood before how it works and all of these. I have coded the trading strategy. So you can get this code done by ChatGPT as well. For example, I'm gonna ask ChatGPT, can you code the BBMA trading strategy in Python using backtesting, using backtesting. So can you code the BBMA? Let me just remind the ChatGPT that the BBMA is the trading strategy that combines the use of moving averages and Bollinger Bands to identify the potential trading opportunities. Alright, the moving averages and Bollinger Bands indicators. Alright, let's see. So this is the concept of the BBMA trading strategy. The buy signal when the price touches or goes below the lower Bollinger Band and the market is trending up, indicated by the price being above the moving average. So when the price touches or goes below the Bollinger Band indicator and is being above the moving average indicator, it buys. And when the price touches or goes above the upper Bollinger Band, the Bollinger Band indicator, and the market is trending down, which means that it's indicated by the price going below the moving average. So when it goes above the Bollinger Band and goes below the moving average, it sells. This is the logic of the trading strategy itself, and this is the implementing of it. It has used this test data, and it has used the SMA indicator that is inside the test, and it had used the crossover. So look, it's different than mine. I am calculating the upper band and the lower band in with different things, right? So this is the point. It can be different than your code, but it's going to work. So it has give it the first 1000 row of data from the GOOG test data. We are not using test data, we are using real data that we have got from Luxy. But GOOG is also not is also a real data, but it's from too far away. It's probably from 2013 or something like this. Let me make sure. So let me just go to it. I'm gonna say from backtesting.test for GOOG. Alright. So let me get into this and see what is this data. It's saying it's data frame of daily. Let me make this data frame of daily Google and Alphabet stock price data from 2004 to 2013. it's real data, but it's just from too far away. It's like it starts from 2004 and ends on 2013. This is like so long ago. So in our backtesting, I am using data that was recent because, of course, things change. Financial things change uh, during the like with time. A lot of things changes, right? So make sure not to use some old data, especially when you're really backtesting and you're really interested at knowing what would have this trading strategy done. For example, if it worked in the past 2 years, not from 2004 until 2013. This is too long ago, right? Maybe at this time it would have performed better, it would have performed worse, but now it would have performed differently, right? So uh, we were checking the ChatGPT code. All right. So it has used the last 1,000 data rows of the GOOG test data. Using the last 1,000 rows, yeah, okay. And then it had run the backtest of the it had run the backtest itself on the data and on the trading strategy it has coded. I'm literally doing the same. Actually, let's try taking that code, using it instead of the one that I have written. Let's see. Where is it? BBE, BBMA. Alright, so I'm gonna try it out. I am gonna say py BBMA.py. Let's see if it's going to work. Has no attribute rolling. It probably has a mistake in which line. It's here. Make this a bit bigger. Line 36, it's coming from run, and then it's coming from this line. Line 13 init self.i self.i self.bollinger bands self.data.close and giving it 20. So indicator Bollinger has no attribute rolling. So let me try copy pasting this. It raises this error when I run it. So let's see. So let's first understand the error. The error encountered is due to attempting to use pandas rolling method, which doesn't support this method directly. The cell.data.close in the context of backtesting strategy init method is not a pandas series, but rather a custom object type. Oh yeah, so the cell.data.close should be a pandas series. So to fix this issue, we need to adjust the implementation of the Bollinger Bands calculation to work on with the data types used within the backtesting.py framework. And instead of using pandas rolling method directly, we will calculate the rolling mean and standard deviation in a manner that is compatible with the library's structure. Alright, so there was like the rolling method takes a pandas series, and we're not passing it as a pandas series. So it has fixed the issue. let's see now. It has written the full code now. Alright, so let's try it. We have another error. Let's see. Now I am getting this error. The error you're encountering now is due to a mismatch in array shapes during the calculation within the Bollinger Bands function. This typically happens when operations on arrays of different lengths are attempted. In this case, likely during the calculation of the upper band and the lower band, where we're trying to perform operations involving arrays with the prepended not a none values and the original arrays. The key to solving this issue lies in ensuring that all operations within the Bollinger Bands function are performed on arrays of the same length. Given the convolution approach and the appending of not-a-none values to match the original array's length, we need to make sure that the operations correctly align the data. Let's correct the approach by adjusting the Bollinger Bands function to ensure that the length of the input and the output arrays match perfectly. We will use a method that avoids the shape mismatch. So it's just about the shape mismatch. If you know a shape, the shape is maybe I'm passing an array of maybe a 2D array, but it's expecting me to give it a 3D array, for example. So there is just something in the shapes of the data I'm passing. So let's try now. Strategy is not defined. Oh, it did not import the rest of the things, so I am gonna take it from here. Let's find out. We have another problem. Let's see. By the way, I have coded this backtesting already, and I'm sure it's going to work. But I'm just taking you through coding it using ChatGPT. I'm taking you through using ChatGPT to code it for me instead. Oh, it's saying that this is not an error actually. This is just a warning. But alright. So I just need to put this back and only change the strategy itself, logic. So okay, so let's try now. PD is not defined. Import parameters as PD. Alright. Well, it worked, but it has problems. So let me take it again. It worked, but apparently the logic is not correct because it is returning these values. This can happen for a few reasons related to the logic or the conditions set within your strategy, especially in relation to the conditions set for entering and exiting trades. Let's go over some common reasons why your strategy may not be executing any trades and how you might adjust it. Conditions not met. The most common reason for a strategy not executing any trades is that the conditions for entering a trade were never met during the period tested. This could be due to how the buy and sell signals are defined. So it's basically telling you it could give no information like this, like giving everything zeros and not a non-value. Maybe because conditions of the trading strategy itself did not met. when to buy, the signals to buy and the signals to sell did not meet. So it's pretty fine. Or maybe it would be the signal conditions, or maybe it would be look back period. For indicators like moving averages or Bollinger Bands, there is a look back period required to calculate the first value. If your data set isn't long enough, or if your strategy starts checking for conditions before enough data is available to calculate these indicators, it might not find any valid entry points. So it could be also because we're getting only the first 1000. So I am gonna say I'll just give the whole data, delete this, and let's see now. Given the same, so this is not our issue here. So adjust the indicator parameters. Try using shorter moving averages or a smaller window for the Bollinger Bands if your dataset is relatively short, or if you suspect the lookback period might be an issue. Well, I have parsed the whole data frame, so I don't think this is the issue. So another thing that would cause that problem is off by one errors. And the time series and financial data analysis, off by one errors where the index is off by one position can prevent logic from executing as expected. This can especially be a problem in conditions that compare the current and previous values of the indicators. So we need to review the indexing conditions. Well, this is a logic problem as well. So incorrect indicator calculations, there might be an issue with how the indicators are calculated or applied. Ensure that the Bollinger Bands and the moving averages are being calculated with the correct parameters and that their values are what you expect. Right. So there might be a problem in the indicators as well. So it's gonna suggest you what to do to fix this issue, but I'm just going to stick to the one I have written. Yep, I think it was this one. Alright, that's it. This is the trading strategy that I have written. So let me backtest that trading strategy. So let me get a data path. It's probably this one. Okay, I'm gonna take the path of the data and I am gonna load it into pandas data frame. So I'm gonna say data equal to pandas.read CSV. I'm gonna give it a data path. I'm gonna put the character. Alright, so I have loaded data. Let me tell it to parse the dates equal to true, and the index column is date column. Alright, so then I am going to run the backtesting. I'm gonna say backtest. I'm gonna give it the data. I'm gonna give it the trading strategy. BBMA, I called it BBMA, right? Okay. Let me call it BBMA trading strategy. BBMA trading strategy. I'm gonna give it cash of 10,000 and creation of. Right, let me run the backtest, run it, and then this is gonna return the data. So or like return the results. So I'm gonna save it into a variable and then print this variable. Alright. So try that out now. Take your time. Oh, cool. It worked on 12 trades and win rate was 0%. Doesn't seem interesting. Well, that doesn't work for me at least. Wait. Oh, yeah. Still here. Alright, it's like a 6 month data or 7 months, something like this. So let me save the output here. Alright. Cool. This is the output. Alright, so let me backtest one more trading strategy, and then I'm going to compare the trading strategies, and I'm going to choose one. I'm not gonna compare all of them, but I'll just show you how you could do this. Alright. Let me backtest trading strategy. Alright, I'm gonna backtest a trading strategy called EMA Super Trend. Well, I have backtested a lot of trading strategies that are related to super trend. So we do this one as well. So I'm gonna call it EMA Super Trend Y. Alright. Alright, so I'm gonna import pandas as PD, import numpy as NP, and import strategy and backtest. So I'm gonna say from backtesting, import backtest, and import strategy as well. And then I'm gonna say from backtesting.lib, import crossover. We're gonna use the crossover here. Alright, so we need to calculate the SMA indicator and calculate the super trend indicator. So it's we'll just calculate them. So I'm gonna create a function that calculates the SMA. I'm gonna call it calculate SMA, and it's gonna get the series and the period as parameters. So I'm gonna say series and period. Well, I couldn't, like, it's fine to not calculate it in a separate function and just write the logic of it in the trading strategy itself. I don't have to create separate functions for calculating the indicators, but why not? So I'm gonna say return series.roll, giving it the period, window, and min periods of 1, and getting the mean of it. Alright. So this function calculates the SMA. Well, it looks better this way. So I'm gonna calculate the super trend indicator. I'm gonna use that as well, super trend. I'm gonna give it a data frame and period, which is a default 7. By default, it's 7, and multiplier of 3 by default. So I am gonna say the HL2 equal to data frame of high plus the data frame, the low of the data frame over 2. Then the attribute equal to data frame of, the high of the data frame negative the low should be negative. Alright, and then I'm calculating the attribute equal to attribute.roll, giving it the period and getting the mean of it. Cool. And I need to get the upper band and the down band. So I'm gonna say up band equal to HL2 negative the multiplier multiplied by the attribute, and the down band equal to HL2 plus the multiplier multiplied by the attribute. Alright, and then I'm going to return the I'm going to find all the rows that has the close column greater than the down band. Alright, I'm gonna say data frame of close is small greater than the down band, giving it the start and the end. Alright, so now I have coded the indicator. This is called super trend indicator, and this is SMA indicator. Alright, now it's time to code the trading strategy itself. Right, so I'm gonna create a class of it. I'm gonna say class EMA super trend trading strategy, and I'm gonna make it inherit from the strategy, initializing the init method itself. And what does this init method do? It calculates the indicator with a period of 9 and another indicator of period of 25. So I'm gonna call the function that I just created and save it into the EMA line, which equal to self-define, passing the function that I created. I could also put the logic here and giving it the close of the data frame and giving it 9, which is the period. So the EMA 25 is the same, and I'm gonna say this is 25. Alright, perfect. Calculated the EMA indicators. Now I need to get the super trend indicator. I'm gonna call it super trend. Let me make it super trend indicator equal to calculate the super trend and giving it the data frame. Alright, so now I will do the next function, which gets executed every time frame of your data. So I am gonna say, and this is the logic of buying and selling according to the indicator goes. When something happens, you are going to buy. When something happens, you're going to sell. So I'm gonna say if a crossover happens between the EMA 9 and the EMA 25, and there is and the super trend, the most recent super trend equal to 1. So most recent, so it's -1. If this happens, I am going to buy, and if something similar happens, I am gonna sell. It's the same, but I am gonna check for the crossover, reversing these two. So I'm gonna say if the 25 indicator, the EMA indicator crossovers the self EMA, and the super trend is -1. This is when I am going to tell. Alright, perfect. So I have coded the trading strategy logic. Now it's time to backtest. I'm gonna create an object. First of all, I need to load the data into a variable, so I'm gonna set data equal to pd.read csv, get into path of the data. Let me copy paste it. Alright, copy the path. I will paste it here. And I'm gonna put my escape character. So I am gonna parse the dates equal to true and set the index column to date column. So alright, now I have loaded my data. Now I want to backtest using that trading strategy I have coded and using the data I have loaded. So I am gonna say backtest. I'm gonna give it the data and give it the trading strategy, giving cash of 10,000 and give it a commission of 0.002. Alright, I actually need to save this into a variable because this is going to create an object of the class backtest. So I'm going to save it into a variable, and then I am going to run the backtesting object. Of course, this is going to return results, so I'm going to save it into a variable as well, and then I'm going to say print results. Alright, that's perfect. Now let me ensure the logic of the trading strategy, and then we run and then we can run the backtesting. Let me ensure the indicators. Alright. Okay, the logic seems to be fine. I think I'm going to run the backtesting, but I also wanna show you how you can plot results. I can say et.plot after printing out the results. So I am gonna say py ema super print.py. df is not defined. Where's this problem? df. Yeah, I should say data, not df. So, or maybe I could call this one. Yeah, I could call it df instead of data. Alright, let's try now. Remember I had attribute where. Oh, I have mistaken here. I think it should be where lowercase. Pencil values 26. doesn't match length of index 13. And where is this error? Oh, I think it's a problem that is related to the blotting. I can not blot it now because I didn't blot the previous ones anyway. So this worked on 13 trading strategies and it gave me 0% win rate. Alright, so I'm gonna take it. I'm gonna save it right here. Alright, that's perfect. That is perfect. We have backtested a lot of trading strategies. I think that's enough backtesting for now. So what am I gonna do now is I am going to compare some of the trading strategies that I have backtested. I'm gonna compare them to each other to try to find a decent trading strategy, right? So, and we will use ChatGPT to help us picking a good one. So let me choose this one. Maybe this one, the 770 EMA. I am gonna say trading strategy 1. Let's just introduce what am I trying to achieve. Alright, so what am I trying to achieve is knowing or getting help to choose a trading strategy. So I have backtested a lot of trading strategies. I will show you the results of the backtesting, and please help me choose one to create my pot with. Alright, I am gonna say trading strategy 1. This is the first one. Trading strategy 2. We compare it with which one was this again? We compare it with this one. Trading strategy 2. This is the Bollinger Bands. This is the one that is using the Bollinger Bands indicator, and the DMA. Well, I didn't save the output of the DMA, so super trend EMA. Let me take the EMA. Trading strategy 3. Alright, and this is the MA momentum. Let's take this one. Trading strategy 4. Well, I think this is enough for now. We are gonna choose one and compare it to other ones. So I am gonna say give me the advantages and disadvantages for each these trading strategies. strategies. And if you were me, which trading strategy would you choose? Alright, let's see. Alright, it probably has chosen the email crossover. Alright, so let's read everything it said. Okay, trading strategy 1, the EMA crossover. The uh, advan the advantages is positive annual return. With an annual return of 37, this strategy outperformed many passive investment strategies. It's telling you that this annual return outperforms many passive investment strategies. A moderate exposure time of 58% suggests that the trading strategy doesn't keep you in the market at all times, potentially reducing risk. So this is, a little bit good for people who doesn't want to take risk. Good profit factor. A profit factor of 3.4 indicates that the gross profit is more than three times the gross loss. So if you would win, three times more than the gross loss. And positive expectancy. An expectancy of 4.7 means, on average, each trade contributes positively to the overall return. Reasonable number of trades. 13 trades over the year shows a selective strategy that doesn't overtrade. Right? So, and this is the advantages. So what is the disadvantages? Underperformance versus buy and hold. Despite its gains, it underperformed comparing to the buy and hold return of 89. So this is bad. It underperformed compared to the buy and hold return, right? So, and lower win rate. A win rate of 38 suggests most trades are losses, which may not be suitable for all investors. It also has a little win rate, but it also said that if it would win, it will win three times more than the gross loss. So the gross profit is three times more the gross loss. So yeah, it has a 38%, but if it wins, it's gonna win three times more. So this is really dependent on you. This is dependent on your risk. Do you want to have this one? Do you want to have such a a smaller win rate but a profit three times better than the loss? For me, I would take it because it had 30% of winning, or how much? Yeah, 38. like almost 40, let's say 40% of win rate. This is almost 50%, which means that if I lose 1, 2 times, or maybe 3 times, I'm gonna get it back if I win 1 time, because the profit is 3 times higher than the loss, right? So for me, I would risk it because I'm a little bit of risker. So let's say if you make a streak of 3 wins, then it means that to lose the profit you have made, you want to make 6 losses, which is decent. But it's all dependent on your risk. Maybe you want to take a trading strategy that has a higher win rate and maybe less profit or higher loss. It's all dependent on your risk, on your profile. Alright. This is the trading strategy 1. The trading strategy 2, the Bollinger Bands trader, the advantage is non-significant. The strategy has mostly negative indicators. It's saying that this trading strategy is mostly too bad. So the disadvantage is significant loss. A return of minus 46% is a substantial downside. High number of trades. 301 trades suggest over trading, which can increase transaction costs. It's telling you that maybe a reason for this bad performance is that it has made a very large number of trades. So this could affect the cost of the transaction, right? So it has a negative expectancy. An expectancy of negative 0.2 means the strategy is expected to lose money on average per trade, and very low profit factor. A profit factor of 0.5 indicates the strategist losses nearly double the gross profits. So this is too bad. The profit factor is too little. That means that the profit factor is like half, and that indicates that if you win 1 time, or I mean, if you win 2 times, so the profit factor this profit factor indicates that the losses are double profits. So if you win 2 times, you will lose 4 times, which is too bad. Alright, so this trading strategy is pretty bad. Nobody would choose it, I guess. And we have the EMA strategy. The advantages of this: a high number of trades could be advantageous if looking for frequent small opportunities, and the disadvantages: extreme loss, nearly a total loss of capital with a return of negative 99.8, and very short average trade duration, indicates a possibly overly reactive strategy that might not capture longer term trends, and it has a negative expectancy and negative profit factor. Both indicate that the strategy is highly unprofitable. Extremely high number of trades with 3,539 trades, transaction costs could significantly erode any potential gains. This is the third one. I wouldn't choose it as well. The MACD strategy, the advantages of it is high annual rate with a 68.2 annual return. This strategy offers a high potential return. This is good. A win rate of 100%, though based on a single trade, indicates a potentially effective strategy for the period tested. It's saying that it has 100%, but of course then don't depend on this that much because it has one trade. So that doesn't mean that it will always win. It was tested on only one trade, which means that this percentage is not accurate, right? So very high single trade profit. shows the strategy can capture significant moves. So the disadvantages of this, that it was made on a single trade, is the strategy executed only on one trade, making it difficult to assess its reliability and robustness across different market conditions. And it has a high exposure, nearly constant market exposure. 97.7% can increase risk, especially in a volatile or down markets. And this is the disadvantages, and it's recommending for us which one to choose. So if it's telling me if I were choosing, I'd lean towards the trading strategy 1. I mean, that makes sense. Given its balance between performance, exposure, and risk management indicators, while it doesn't match the buy and hold return, it demonstrates a disciplined approach with a solid profit factor and positive expectancy, suggesting it could perform well across different market conditions with some adjustments. So why not 4? Despite its impressive return, strategy 4 reliance on a single trade makes it difficult to evaluate its consistency or how it might perform in the future. The high volatility and drawdown would suggest that it might be riskier than it appears. So basically, it's telling you that wouldn't I choose the 4th trading strategy? It's telling you because the backtesting we have done to it is made, or like the results were on only one trade, which is so risky, which we cannot really trust the results because it was made on only one trade. Right, so why avoid strategies 2 and 3? Both strategies have significant disadvantages, with strategy 3 showing nearly total capital region and strategy 2 also performing poorly across most metrics. When selecting a strategy, consider your risk tolerance, investment goals, and the transaction costs associated with the high-frequency trading strategies. It's also wise to conduct further backtesting across different time periods and market conditions to ensure the chosen strategy's robustness. So that makes sense. Among these trading strategies, we have asked ChatGPT about. It's suggesting for us to choose the first one. So I am gonna take the first one and keep comparing it with another trading strategies. Alright, I'm gonna take it like this, and I'm gonna say, that is great. I am gonna send more results. Alright, so I am gonna give. So let's firstly say trading strategy 1, the one that has 1. I'm gonna give it, and I am gonna start to compare it with another ones. Right, so let me compare it to the turtle EMA. I'm gonna take it, and I am gonna say trading strategy 2, and we have the TEMA. No, I'm gonna take stochastic with trend. It was also made on one trade. Well, let me choose one that wasn't made on one trade. This is also made on one trade. Smash, pull back. Alright, that one seems interesting. And this is the trading strategy 3. Moving average trap. I'm gonna take this one. Trading strategy 4. And let me take this one as well. Alright, trading strategy 5. Alright, so I'm gonna give it the same font. Well, I'm not sure that I'm gonna be able to reach it. So I am gonna say, what about these fonts gave me the same analysis? Alright, let's see what it got in the box. So this is the trading strategy one. This is the first one that we got as a result from the previous set of trading strategies. So let's read. The advantages: positive return and annual return, indicating profitable performance over the tested period. Decent Sharpe and Serena ratios, suggesting good risk-adjusted returns. It's saying that it has decent Sharpe and Serena ratios, and it suggests good risk-adjusted returns. So, moderate exposure, indicating the strategy doesn't stay in the market unnecessarily. A solid profit factor, indicating profitable trades outweigh the losses. Disadvantages: lower win rate, suggesting a higher ratio of losing trades. It has a lower win rate. Underperforms buy and hold return, indicating potential missed opportunities for greater profits. So we know this one anyway. We have read it in the previous response, and we compared it to the other ones. Alright, so the second trading strategy is the Turtle EMA advantages. Higher number of trades, indicating an active strategy that seeks opportunities frequently. So this strategy seeks opportunities frequently, which is a very good thing. And disadvantages: significant negative return, indicating a substantial loss over the testing period, and it has a high exposure, increasing the market risk, and it has a low profit factor and negative expectancy, suggesting an overall unprofitable strategy. So it has a low profit factor, which is, a very, very, very high disadvantage for me. So the trading strategy 3, smash pullback strategy. Advantages: non-significant due to extreme loss. It has an extreme loss. So the disadvantages: near total capital erosion, indicating an extremely risky and unprofitable strategy. High trade frequency with a very low win rate, contributing to significant losses. It's saying that it has a high trade frequency with a very low win rate. That's pretty bad. And extremely negative expectancy and SQN values, indicating poor performance. Right, so, and the trading strategy 4, moving average trader. The advantage is higher win rate compared to some other strategies, suggesting a better ratio of winning trades. And the disadvantage is substantial negative return, indicating significant losses. high trade frequency, but potentially increasing the transaction costs, and negative expectancy, indicating an unprofitable strategy on average. And the MOSC strategy advantages, it has no advantages. And the disadvantages, total capital loss, indicating an extremely risky strategy, extremely negative average trade percentage, further highlighting the strategy's poor performance, very low trade frequency. Well, and it's recommending the first one. Alright, so that seems like the first one really outperforms all the trading strategies that we have backtested. So the point of this, I have backtested little trading strategies. I only backtested 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. I mean, not this, 12, 13, 14, 15, 16, 17. So I have backtested 17 trading strategies, and I think I compared like 9 to each other, and among all of these 9, it appeared that there is only one trading strategy that was good according to them. So imagine. So that means that you are gonna spend a lot of time backtesting to find a good and winning trading strategy, and this takes a lot of time backtesting, 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 backtesting. You are gonna backtest a minimum of 30 trading strategies and keep comparing them to each other the same way, right? Because as you saw, as you noticed, when I was comparing the trading strategies to each other, there was a lot of trading strategies that didn't have advantages. There was a lot of trading strategies that were too bad. So imagine that you're going to create your bot with one of these without backtesting. So backtesting is really so powerful. And also I made a chat GPT help me choosing one of all of these, and it has suggested me to pick the trading strategy. Or you will keep going. You will keep backtesting, 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 backtesting. You will keep backtesting all the time, backtesting. But after you find a really good trading strategy and you think that you should stop here, you should stop backtesting, you should going to look for more trading strategies, you should stop looking for more and you should use this trading strategy, then it's time to create your bot and it's time to rest and it's time to stop looking at graphs and it's time to just let your bot running all the time, right? So that's it about backtesting. For me, for the backtesting I have done, it has chosen for me the EMA crossover, which is this one, I guess. Yep. It has chosen me this trading strategy. This one. Oh wait, is it this one? Let me make sure, because I have backtested a lot of EMAs. Oh, it's not this one. It's the EMA crossover. Where is it? Moving average 717 EMA. Oh yeah, it's this one. It's the 717 EMA. So this one seems to be the best one among all the ones I have compared to. I will keep going, I will keep digging deep, and I will keep reading, I will keep finding more trading strategies that I can backtest until I find a better one than this one, because I'm not gonna stop here. Of course, this one is not the best either. I am gonna keep digging deep. I'm gonna keep looking for another trading strategies, I'm gonna keep backtesting them. I'm gonna keep comparing them to this one because this one was the best one among the ones I have created. So I am gonna compare the other trading strategies to this one until I find a perfect, or I mean nothing's perfect. So until I find a very good trading strategy, and until I find a trading strategy that is better than this one. uh, I have backtested a lot of trading strategies in my previous streams and in this stream as well, and it seemed like among all the ones I have tested during the streams, this is the best one, the crossover EMA, which is dependent on, which is relying on the 17 7 EMA and the 17 EMA. So I would choose this one for now, and I would just forget all of these and just choose this one. And I would keep backtesting. I would keep reading about another trading strategies and another uh, like understanding another trading strategies and another backtesting, and I'm gonna keep backtesting, keep comparing, backtesting and comparing until I find the best trading strategy that I can create my bot with. And remember that this backtesting is only one part of the trip of creating the whole automated bot for yourself. This is only one step, which is the backtesting. To learn everything, make sure to check that link that is provided by Moondev. Moondev is a streamer and a YouTuber on YouTube. He will teach you step by step how to automate your trading and how to create your own trading bots. Uh, if you get access to his bootcamp, if you get access to his bootcamp, you are gonna get access to his Discord channel, which there is a lot of code that is related to backtesting, a lot of code that is related to the trading strategies, and you will learn step by step from zero how to create your own bot that trades for you when you're sleeping, how to create your own bot that just just running all the time, running, and you're not focusing with it, you're not looking at it, you are just letting it run, and it's running and it's making profit according to that perfect trading strategy you could get and you could choose by back testing. So remember to check that link and check the bootcamp content, read about it, read what is he going to teach you, and decide if you should take that bootcamp with Moondev. Alright, thank you so much. I see you guys in the next stream or next video.